Hello, everyone. Welcome to NFP Live. I'm Shane Vernier, and this is the Switch Markets YouTube channel. I'm glad that you guys decided to join today to cover our latest installation of the U.S. jobs number. I'm going to be honest with you. It's not that big of a deal. It really isn't. Right now, we're pricing in Iraq war developments, and we're in a situation where we have an exploding crude oil market. We've got a lot going on with regards to just basic analytics that just don't seem to matter. They really just don't seem to matter. So essentially what we're talking about doing is trying to get on the right side of a market that's absolutely explosive. And I think that that's huge that we understand what that means. It means keeping our powder dry. It means staying safe in the face of adversity, but it also means getting in there to make some money. So I'm glad that everybody joined up today. I think we're going to have a lot of fun. We are going to cover the jobs numbers. I'm going to give you our expectations and everything that we're looking for. But I have to say, I mean, right now I'm divided. We're trying to live stream, and I'm watching this crude oil market, and I really can't believe the volatility. I haven't seen anything like it since Arab Spring. We've got messages coming in all the time. It's going to be a fascinating session. So I'm really excited to be here, and I'm glad everybody joined up. Okay, let's get right out to the issue at hand. Excuse me, I can hardly speak, but it's definitely a big one. This is U.S. oil right here on a daily. We're up about 9% during the overnight. That London session, the bids came in, and they came in big. And essentially what people are pricing is that Strait of Hormuz that we talked about earlier this week. It looks like that choke point has ground to a halt. So we're starting to see a little bit of the supply disruption creep into the market. I've been looking for the outlier, the key event from the Iran war that would send prices this high, this fast. I haven't found it. I don't know if there's a big strike. Maybe I'm missing something. This is the game. Now, I'm not going to bore everybody because I know a lot of you don't trade U.S. oil, and I'm not telling you to trade U.S. oil. Believe me, it's the wild west of the markets. I love it. This is what gets my juices flowing, is seeing moves like this. But big picture, everything is predicated upon the energy markets right now. We are seeing oil dictate policy. Now, we've got a little bit of negative action in the futures markets. It's not as bad as I would think. But right now, you've got the big pop in oil. We're looking at equities futures, thinking maybe we're looking at a down day there. U.S. dollar, we had a great question in the live chat over here at How to Trade. The U.S. dollar, is the dollar just a safe haven and stronger than the rest? Or are we looking at something that maybe is a little bit more rooted in deeper fundamentals? Right now, the U.S. dollar, we're seeing a little bit of capitulation. We're seeing what we call dollarization, and that's what we saw during the beginning stages of the COVID era. And essentially, when that pandemic was breaking out, people ran into the U.S. dollar. They ran into the U.S. dollar above all else, and the reason why they did that is because, yes, it is a safe haven. So we have a sophisticated trader over in the room, Bluefin, good to see you, Blue, but definitely a great point. Is the dollar just going to be stronger, and are the rest going to fall by the wayside? Things like the Swiss franc, things like the Japanese yen. I think this is temporary. I really think this is temporary, but we've got to go with what we know. We know that in times of panic and strife, the U.S. dollar does catch bids. This is going to be a big one. So we've got a key event coming our way right here. I want to say hello to everybody out there. Let me see. NV Creations, good to see you. Welcome. Today, Market Direct, U.S. dollar, Japanese yen. Yeah, we're going to go ahead, and I'm more than happy to cover any pairs that we would like. We're going to do some 9 EMA trading in real time after our NFP number drops. That's going to be a lot of fun. I'm going to give you some expectations as well. Tina Jane, good to see you, Tina. Welcome. Are you going to U.S. oil? Yeah, U.S. oil's huge. This right here was the level. I posted some things on my Twitter feed last night that broke down probably one of the biggest resistance levels, and it got freight trained. I mean, let's be honest. Russia invasion of the Ukraine brought about that big spike up there. Nice big sell-off. We came down. I was looking at 83.50s as being really a staunch area of resistance. It got taken out. Next protocol is 92.20. I got to tell you straight up. If this continues, if this sentiment continues, $100 crude oil. And it could come very fast. It could come as early as Monday. We just don't know what's going on in the region. Something is not going according to plan in Iran, and that is prima facie evidence right there. When you see a panic run like that in U.S. oil, that's exactly what we're talking about. So good to see you, Emmanuel. Good to see you out there. Pack up. Gordon Williams, good morning, Gordon. And out in our How to Trade community, let's see, Yaku. Yeah, post whatever you'd like, Yaku. Andrea Garwal, Bluefin. Got a lot of the crew there that's been with us at How to Trade for years. So if you have any questions, be sure to ask. Tuku, good to see you. Tuku, welcome. All right, guys, let's go ahead and just get right into the task at hand, which is NFP, and then we'll break down these markets after the NFP numbers drop, and we'll do some live trading with that 9 EMA. What we've got today is U.S. non-farm payrolls, typically one of the biggest events of the calendar month, except when you have a war. When you have a war, The war wins. The war is driving everything right now. It's driving uncertainty to levels we haven't seen. Remember, NFP, if we see a low NFP beneath expectations, that's going to be bearish for the U.S. dollar. That's going to suggest that you're going to need interest rate cuts to stimulate the economy and get things going. That's going to be dovish for the USD. If it's a high NFP number, it means it's going to be bullish for the USD. Maybe rates can stay where they are. To be honest with you, I don't think that the NFP is going to have much of an impact on our interest rate expectations at all today. Here's what we expect. We're looking for non-farm payrolls to come in vastly lower than the previous release of 130,000. We're looking for 58,000 today. Remember, backward revisions are everything. We'll cover it when it drops. I'll show you exactly what to look for. Unemployment rate, 4.3%. This is one that I always call shenanigans on. I think if we're going to see a surprise, it's going to be in that unemployment rate. Remember, the Fed's benchmark, where they like unemployment, is right around 4%. We're above that. We are above that. So right about now, we're thinking, man, I don't know. We're sort of getting sort of the top end of what the Fed likes to accept as far as optimal employment, maximum employment. We'll see exactly what develops here, but I think that could be the surprise. I always am watching the unemployment rate. Always, always, always. Average hourly earnings, people make a big deal out of that. I'm not worried about that. We also have retail sales from January dropping today. That government shutdown from last fall really put us in a data log jam. So we've got retail sales dropping as well. Don't get too carried away with that. Really, don't get too carried away with that. We're going to look at NFP. We're looking at war headlines. We're looking at pretty much everything that we need to be looking at that drives participation. And remember, if you want to trade any of these ideas or any of these things, head on over to Switch Markets. They've got you covered. Thousands of global markets, 1 to 1,000 leverage, $50 minimum deposit. They've got bonuses. They've got everything you need to get up and running. Or if you're looking for a new broker, consider Switch. I like to diversify my brokers. As a futures trader, I have more than one. I find that each broker does something just a little bit better. But the 24/7 customer support over there at Switch, all you do is click your little window there, and you can get somebody ready to chat right away. So definitely check out Switch Markets if you're interested in getting involved in the action. I think it's a good time to be in the markets. I've had a lot of fun this week. We've been double dosing the streams over on the Switch Markets YouTube channel. Tired. I got to tell you, I haven't been fatigued in a long time, but I'm pretty tired. So if I make some mistakes, don't hold it against me. Here's a market that we definitely need to watch, though, as this NFP drops. US 30. US 30 is trading at an absolute key level, 47,750-ish. Right now, we're at 47.7. That 38% level on this monthly chart is huge. If this does fall away, we could be in an absolute free fall down here to 46,891. Very interested in what's going on in the US 30. There is some negative sentiment there, and it really is crude oil. It's crude oil and little else. Dollar yen, we had a question about the dollar yen. Well, here's the monthly. What I would be focused on right now would be January's high. That's your yearly high, right up around 149.50. Be aware that that is there. Be aware that that's there. Now, as far as bullish or bearish, I'm really neither. I mean, I'm really not interested. You can see we had this monthly double top right there, January 2025. Markets have memories, 158.88, 159.50. This zone, pretty good double top from about 158.80 up to 159.50. Pretty good resistance right there. Let's take a look at the short time frames. What do we have here? Maybe on a 30-minute chart. Not a whole heck of a lot. A little bit of a rally pulling back right now ahead of NFP, which is not to be unexpected. Definitely, I'm interested in the yen. We're going to wait. We're going to wait a few minutes and let this thing set up. I think that's absolutely imperative. We got so many different strategies to choose from. I always focus on my Fibonacci's because that's my go-to. Silver's a big one right now. I want to quick look at these metals before this number drops, and then we're going to do some high-impact scalping on the 9 EMA. Right here, we've got a pullback right around that 76 level. Still watching it. Big negative month for silver after just incredible positivity over about the last year. You're looking down about 12%, but the way these markets are moving, we can erase that very, very quickly. So I'm watching 76, that 76.50 to 75 area. That's pretty good stuff for downside support. As far as the rest of it picking a direction right now, you're better off scalping that on short time frames. The macro levels, what I call garbage. We've been trading right in there for so long. That 85 to 80 level is saturated with orders. I'm looking at 76 to 75. That would be a premium buy. I would absolutely love that. Gold, before we get started, real similar. 5,000 has been the 10,000-pound elephant in the room, and we've seen bidders step up and defend that level earlier this week. Definitely one that I'm watching. We're at 5,083. I would take this right down to even, let's just put this on a 1-minute chart. and be watching 5,000s closely. I think that potentially is going to be an area of robust support. Remember Tuesday's low down there at 49.96. The market is likely to wash out underneath that level. All right, let's see. T minus 3, 2, 1. Here we go. Let's see. What is our employment number? Here we go. We got a signal. Okay, there's our big break right there in gold. 1 minute chart. We're going bullish here. Let me go ahead and take a look at these numbers and see what we have. Fantastic move right there, 110, 112. I mean, that right there is the volatility that's in the market. Okay, here we go. The employment situation, February 2026. Total non-farm employment edged down by 92,000 in February, and the unemployment rate changed little at 4.4%. 4.4%. We talk about unemployment. I just got done talking about it. Ticked higher. It changed little. That's a positive way of painting that picture. It went higher. So you've got 4.4% down by 92,000. I mean, this is just a catastrophe. The unemployment rate changed little at 4.4. Employment and healthcare decreased, reflecting strike activity. Employment and information and federal government continue to trend down. Information, that is the AI boom. Remember Jay Powell. Remember what he's been saying all along. He says, listen, we're in a situation where productivity is going to go up. Oh, yeah? Employment's likely to go down. Why? Because of artificial intelligence. We're on the precipice of something very, very big. Some call it the fourth turning. I don't know what you want to call it. Things are changing in a big, big way. What do we got? U.S. oil back up above 86. I mean, this is a nightmare scenario right here for the Trump administration. Edged down by 92,000. That's a horrible number. Okay, so how do we trade this right now? Let's get out to our 9 EMA strategy. This is going to give us some pretty good stuff on short time frames. Now you can see right here, you never take a trade like that. Great Britain pound, US dollar, 1 minute. You never take a trade right before a key news item drops. What are we looking for right now? All right, the biggest thing that we just saw is a play against the dollar. If unemployment really fell by 92,000 jobs, then we've got a real problem. There's trouble in paradise. You're talking rate cuts to try to get this economy going. It's a nightmare scenario right now for the Trump administration. You're looking down the barrel at $90 gold, or excuse me, $90 oil. You've got precious metals at highs. You've got the dollar is pretty high, and now you've got plunging employment. This is a nightmare. This could develop into a full-blown recession by June. And I'm not kidding you. I'm not kidding you. The rate cuts that are going to have to come to bail the United States out of this type of situation are going to have to be decisive and large. That's why later this year, we're going to be looking to bet against the U.S. dollar. Write it down. Write it down. Write that call down. It's going to be pretty good. In any case, the 9 EMA strategy, very simple. When we get elevated over our 70 level, we've got a 70 right there on the RSI. We're looking to sell the market right now. So Great Britain pound USD 1 minute chart. If we get a bearish close beneath that 9 EMA, then we're looking to pull the trigger on it. And we've got all this information. If you're interested in trading this type of a strategy, you can check out this page right here. I'm going to go ahead and put it in the live chat in the YouTube. But what you've got there is something that maybe if you're interested in a custom EA that I built, you can check that out. You've got the EA there. You've also got everything that you need to trade this strategy. Videos, there's instructional videos on that page. We've also got PDFs. So the idea behind putting a strategy like this out is just to get you involved in the market, to get you rocking and rolling and really ready to trade. If you don't have a strategy, it's a great place to begin. If you're looking to augment your approach to the markets, it's not a bad place to take a look either. So I know I'm way behind on the live chat, guys. I'm going to get right there, but I want to take a look at a few of these markets. Gold, right here, gold, fascinating stuff. Now that's an interesting bid right there. Now, I'm saying you don't take sells or bids right before the news drops, but maybe if you want to hold the position with a stop out, very dangerous, but you could see you were in position there. So what do we have happening here? We've got a major bullish run. We've got a major bullish run because all of a sudden that horrible employment number suggests that maybe those rate cuts are coming, rate cuts that we didn't think were coming until later. Maybe they come sooner. What do you think that does? It sends metals through the roof. It sends commodities through the roof. Absolutely fascinating number. We're going to take a look more at it more here in just a second. So you got the same type of situation here on this 1 minute gold chart. You're looking for a close beneath your 9 EMA, and then you're looking to take it to the short. Interesting stuff. This is an example of a trade that we had rolling from earlier. I actually made this trade yesterday. 4-hour Bitcoin chart. Beautiful sell. This trade's trading in the green. We've got a profit target way down there. Stop loss up here. You could probably take the money if you wanted to on this trade, but really a nice position. I really like the 4-hour chart, using this as maybe a swing trading strategy too, not just for scalping on 1 minute. It's all about your risk. Watching gold closely, Okay, let's get back over to the Fibonacci's because I do believe we have maybe something that's going to develop here in the gold market. Now, that right there is a huge range. That right there, you can tell that I'm sort of from the West in Montana. I'm a rural guy out in a rural area, so my English isn't perfect. Believe me, it's not perfect. But what we have developing here is vintage pullback scenario. We're interested in this area right down in there for gold. Interested right down in there if we return to 5,100 because that area was not really traded. We swept right through it. The liquidity sort of dried up a little bit. A lot of people are going to say that's a liquidity sweep. I call it a weak chain. And what a weak chain means is you don't have punters, buyers, and sellers dug in at every price point there, and that's when you get the big sweep. So as of right now, what would we be looking to do with this gold? Definitely bullish, no question about it. But are we trending? A lot of people are going to say we're trending. We're not really trending. I mean, you're up about 0.83%. It's not the end of the world. We didn't just see a 5% jump or a 9 point. I mean, crude oil is up 9%. That's a trend. That's an intraday trend. Brent crude's up 5.5%. Those are trends. Absolutely fascinating. Now, where does gold go from here? Goes higher, more than likely. What do we need to do to trade this thing successfully? We need to try to get on the train somehow, some way. So even though we've got sell signals potentially on our 9 EMA, when those set up, odds are the price action is probably going to be exhausted a little bit. So if we have a chance to sell maybe in 5, 10, 15, 20 minutes, that's great. We want the market to settle down a little bit. Maybe it's overreacted on the news, and we can actually sell it with a little confidence. But for right now, what I would be looking to do is back off to a time frame where we have some symmetry, something like this, a 5-minute time frame. And you can see you've got a nice wave that's developed here. But you also have a really big range. That's about 0.79%, big range. We're trending higher. I would love to buy pullbacks in this instance. I would love to buy pullbacks. And do we get one? Do we get one worth buying? Well, there's a couple ways that we can attack this. We can attack this right as our really our bottom, our news bar bottom, right to our top, and then look to buy in there. Not a bad idea. You've also got a nice big range that developed back about a half hour before the news. Nice symmetry. Buy a pullback into that range. It's not bad either. The real question is what is best? What is best? I always like to focus on the news. I always like to focus on where the volume really is, and the volume came in a big way right here. So let's go ahead and take a look at something like this potentially. What could we do? Well, we could look to bid, and you need to dial these in exact, but bidding right there, maybe from 5,113-ish. It's risky, of course. Still could be pretty good. The problem for us is do we really want to sit here all day to get our pullback? I don't really. I think there's better things that we can do. We haven't even got to our Forex. We got to look at the Forex pairs. But something like this, perhaps. Maybe we go to trade. Maybe we get our paper trader loaded up. Remember, ignore my leverage here. This is all paper money, funny money. I was trading real money all week. It was interesting. It was interesting. That's for sure. So you've got gold. Let's see. Let's go 10. Put this down here. Like I said, don't worry about our leverage, but something like right in there. It's not a bad bid. Maybe up even a little bit more aggressive. Maybe 115s, somewhere in that zone. You definitely could say that, okay, we've got every reason in the world to want to get on the top side of this market, no question. You can't buy it right now. If you buy it, your trade location's not great. You may have missed the move, and you may be in real trouble. You may get caught up in a reversal. So what I would do is I would be looking to take something like this. Perhaps we'll be looking for a little bit of maybe a $5 bounce, $4 bounce right up in this area. And this is essentially what we'd be doing. Like I said, ignore the leverage. That's very low leverage, but this is a trade you probably could make safely. Now, you'll notice I haven't done anything with the stop loss just yet. Initially, I want to watch this thing play out. I want to see how this thing plays out in real time before I commit to a stop loss. Now, is that dangerous? Well, yeah, it is a little bit. Suppose that this thing runs against us that far. Highly uncommon. So if you wanted to put a stop down just to have it in the queue, you could put it down here maybe just to be safe. But for me, I'm going to go ahead and leave it right. Actually, let's just put it down. Sake of argument. Now, number one thing, you can't take a $97 loss trying to make $48. It will not work for you over time. However, we are going to tighten this thing aggressively if and when this trade comes to fruition. I like the symmetry right now. I have no problem stepping up and bidding this thing. But for me, patience is everything. So we're not going to stick with this that long. We've got too much ground to cover. But interesting trade right there developing. This top, though, are we really going to top out at 51.30, 31? I don't think so. Not with a print that bad. Not with a print that bad. All right, guys, I am way behind here. Hey, Shane, Jason Maxon, good to see you. Jason, welcome. Your mother, yeah, I covered gold right there. What is my bias on Bitcoin? Shredded athlete, Bitcoin. Bitcoin's fascinating to me. We got a bunch of folks asking Bitcoin. Let's go ahead and get on over this right here. US 30 plunging beneath that. That's huge. This thing's going to crater. Absolutely crater. Let's go Bitcoin, 70,000. Put a lot in to the Bitcoin reads. 12-month chart, something like this. Talked a lot about this zone right down in here, 58, something like that, 58,000. Huge downside support. We just can't seem to get sustained up above 70. We thought that maybe the worst of it was over. We closed above 70 yesterday, 70,000. That was a big bullish sign for Bitcoin. But that area, this 50% level of this 4-year range has been an absolute nightmare to trade. It's been chop city. Pull up the daily. Absolute chop city. And when we see price action just like this, I mean, big time move, and we come down, and then we just sort of rotate in this zone, what I call an envelope or a phone booth. I mean, you are trading inside of a phone booth. That range from 70,000 to like 65 has contained a majority of the action for the past several weeks. So we just got an alert. Let's get back out to 9 EMA and see what we've got. Let's see. We've got a sell developed right here on gold. All right, let's take a shot at it. See if we can get in on this. We're going to go ahead and sell it. What you would do here is your stop loss going to be here. Profit target's going to be down in here, at least a 1-to-1. I love 1-to-1s. I think they're pretty good. So this would be a situation where we would be, what are we looking to bid in here? On our Fibonacci's, we're on the other channel. But this right here is a good 9 EMA trade. It's gone positive for us right away. Couple of ways we can execute. We can keep our profit target right down in here, somewhere right in here. We could do that. I can move my stop loss right above the trigger bar. If I do that and play a real tight scalp here, which isn't necessarily a bad idea, then I can bring my profit target up into here, and we could be looking for a high impact scalp. It's just it's more difficult to hit these trades because you're playing so tight. But you have an opportunity here on a 1-minute chart maybe to catch a runner. It really is up to you and how you want to manage these trades. This is definitely a lower probability trade, 1-minute chart, tight stop loss. But it's going in our direction. Maybe this is a trade that we absolutely hit a home run with. Personally, I think we're fighting a little bit of bullish pressure, but it's gone positive. We're up a couple of $100. I don't know. Maybe it's worth letting play out. Starting to get a little bit of that bearish action that we're talking about. Remember, we have that support level in there on the Fibonacci's, though, that I was concerned about. We could just exit the trade right now and win, or we could take a small loss here. We could also stay at conventional and keep our loss up here. Let's go ahead and just let this scalp play out. That's really what it is. If you're going to trade gold on a 1-minute chart, yeah, you better be loaded for bear and ready to execute a lot of trades. That's for sure. For me, personally, I find this to be a challenging trade just because we are going against sort of that trend that we were talking about earlier. Market's not trending, but there's bullish pressure there. You're fighting the news. You don't want to fight the news. You never fight the news, but maybe it works. Maybe it doesn't. That's the beauty of a strategy. You just put it on, allocate your risk management. Let's say we were serious about getting our risk management going. What would I do? Boom, I'd pull my risk manager EA. Okay, we won the trade. We hit the money. So you pull your risk manager EA right here. You'd go in. You'd turn this thing on. You'd assign your percentage risk, and then your take profit and your stop loss, and boom, it would give you everything that you need right there on your risk manager EA. That's how it all fits together, guys. 1 to 3% on a given trade, reasonable profit targets, reasonable stop losses, and you get in there and you win. That's essentially what it's all about. Let's go back to our trading view. What happened over here on this trade? Yeah, we nailed that one. Probably should have just been sitting here watching that one. That's a beautiful thing. Look at that. We hit it perfect. 51.13. Nice check of that area. 51.13, 31. Bounce back up to 21, and we're in the money. So we scalped it on the 9 EMA 1 minute. We came back and drained a nice long trade on the 5-minute chart. That's what trading's all about. That's why I'm laughing, because you can be short and long at the same time and win. The brokers don't like it, but that's why you can have multiple accounts and things. So that's a good look at high-impact scalping for sure. All right, let's talk markets now. We've got a lot of questions about Bitcoin. I'm going to go ahead and run through some of these markets you guys are asking about, and we're going to be after it here. Let's see. Let me give it a sip of coffee. All right. So Bitcoin, what are we thinking with Bitcoin? I think it's very, very choppy. It's very, very tight. And when we start getting into the markets and what we need to do to succeed, is this the kind of market that we want to target? Right now, I'm not interested in Bitcoin. I'm still bullish. I'm still confident that we rotate higher, but it's starting to look like it's going to take some time, like months, before we're talking about the $100 level again. This area right down in here, we've got a trade idea out, 58,000 buys. Love it. Love it. We could get involved down there with a lot of confidence. So I like that for Bitcoin. As far as what's going on right now, it's in an absolute phone booth. Very, very difficult to trade. Dollar yen. We're right back to that dollar yen action. Take a look at that move. Big time plunge, 30-minute plunge of about 0.25%. This is fascinating stuff. It really is, because now the dollar, which has been boasting and strutting around, is struggling. That's a horrible print. What's going on in this yen? It's a challenge. Compression, break. Compression, break. Compression, break. Now we're compressed again. How do we trade compression? Oh, man, it's tough. This area right here on the daily really shows you everything you need to know. Very sort of that megaphone formation where you've got a small range, and then the range sort of gets bigger, and then you get this bigger range, and now we're trying to figure out where the heck, an area of fair value is. And for me, it's going to be probably deep into the bodies of these candles, something like that. So if I was serious about it, well, you can see we've hit that area before, 157. That's not a bad buy at all. 157.09, maybe 157.10s. That's a pretty good area. Now, I don't love the Fibonacci sequence here. I don't love the range. It's not great. Spike low, spike high. I don't like that at all, because it's very, very tight 2-day range. Not really big. It's not, but what do you have in there? You have a demand zone. There have been bidders, and they're consistently right around 157. Let's take this down to maybe a 4-hour chart and just sort of examine what's happened at this level. Pretty good stuff. There's bidders here. Sort of a hammer, ugly stuff right there. That was ugly. Then boom, sell off, bidders. Even that's a negative candle. You got to say they're bidders, because you tested the waters beneath that, and then you closed above it. So even though you're negative, still the bidders sort of won that battle. And then you got the big rush there. Pretty good level right down there at 157. Not bad at all. So I'm interested in that as well. Oh, boy. Unbelievable. Let's see right here. XAG USD. What do you got going on? Nothing really. I would be on the sidelines for silver for a while here. That's for sure. U.S. oil. U.S. oil is absolutely exploding. The next port of call here is $92. $90. This is one of those, when I was coming up, I had the opportunity to trade with somebody who was somebody on Wall Street that knew the oil markets backwards and forwards, and I can already hear him in my ear. I can already hear him. He goes, just buy it and walk away from it. Buy it and walk away from it. And that's the honest truth. I mean, there is no top. In a breakout of this magnitude, there is no top. And listen, eventually the market will slow down and it will retrace. There's no question about that. I expect sellers somewhere right around $90, but we've got WTI volume due to kick up here in the next 13 minutes, right at 9 a.m. Eastern, the traditional NYMEX pit open. You still get a rush of volume there, and then the cash open on Wall Street. Stocks are getting absolutely drilled right now. This is an ugly scenario. This is a trend day Friday. Take care of your money today. You can't really buy it right now. I want to buy it badly. I want to jump in there with 2 fists and buy it, but it's too late. It's too late for that. You're up 10%. You're up 10%. 10%. I mean, at what point are we going to pause the trade at the CME? I mean, are they going to pause or not? Unbelievable. You guys are witnessing something historic right now, so take it in. If you're brand new to the markets, take some notes and write this down. 10% gain. WTI crude, $87. Do we go higher? I'm expecting announcements out of the Trump White House sometime today. Some measure, some way to put a cap on this, because this right here upends the entire economic plan. It does. I mean, that is absolutely staggering. Let's go to a 1 minute. I mean, can we even trade this on a 1 minute? I mean, this is staggering volatility. Look at this. Boom. Look at the volume. Volume's pouring in. Boom, boom, boom. What do you got right here for a Fibonacci? You don't really want to do that. It's too risky. Too much action. Not interested. Beautiful bounce off of 38. Maybe 62. You might be able to play that, but this is high risk stuff. I mean, I'm not interested in doing that just yet. Let's go to WTI crude April futures. Okay, this is beautiful symmetry here. It's a little bit cleaner. You'll notice it's cleaner than the U.S. oil CFD product. Very nice. Huge volumes. That volume right there, which came across the board. Let's see, about 4 minutes ago. 3,000 contracts in a minute. 3,000 contracts in a minute and a 0.5% gain. That is absolutely staggering. The amount of action in the WTI crude oil market right now. If you're an oil trader like me, I mean, it just doesn't get any better than this. It doesn't get any better than this. You know there's going to be some good trades later today. All right, Shane, show me one. Well, all right. I would be waiting until probably, 10 a.m. my time. I want to see the first couple hours of trade during the New York session. But this action right in here, I mean, this is really something. That's a hammer. Boom. We're going higher. Probably step up and scalp in front of 89s tight, scalp in front of 90s tight. Very tight trades. And then wait for about an hour. And then looking for a pullback. Let's go ahead and put our time price offering charts up there. I know I'm getting into the deep, the sort of tall grass. And if you don't really know what we're looking at, that's okay. Don't worry about it. Look at where the point of control was yesterday. Point of control. You think that's an accident? It was right at 80. Break. We're trading above value. Value area high. We're trading above value from yesterday. Where's the new point of control? New point of control is right there. What? $85.93, $86. We could make the case to buy 86s right now, but we're trading 87.33. That's how big this market is. We are moving. Ladies and gentlemen, we are going higher. That's just the way that it is. I'm blown away. I know I'm sort of talking in circles here, but I'm absolutely blown away by that kind of action. Love it. All right, let's go right here. U.S. dollar, Japanese yen, euro, USD. Then I will answer as many of your questions as I can, and we will also recap the trading event of the day, right, which is NFP. I got to tell you, I didn't expect much. That's a horrible print. Absolutely unbelievable. Euro USD, everything is going to be moving. This is a big time, absolutely big time period to be in the markets. If you're in there, take care of your capital. Very important that you don't get sort of washed away with the huge rush of volatility and volumes. 115.11 is our 13-month EMA. Definitely downside support here for the Euro USD. I would be watching that area like a hawk. 115, maybe 115 and a quarter to 115. Absolutely beautiful support zone. I think that area in and of itself, has a real opportunity to shine for us. We've seen a low down there. Low is right around 115.30. Don't be surprised if that gets washed out a little bit. I would expect the weakness in the USD following this NFP number to be fleeting. I expect the dollar to tick higher from here today, but I don't know how this is going to play out. Nobody does. Let's get on with a few indices. Good stuff right there with the Euro USD, though. We did have a trade idea out yesterday. Let's have a look. All right, this is exactly what we're talking about. Euro, Great Britain, pound. Sometimes it's best to trade things that aren't correlated or really synced up with the U.S. dollar. So what do you got right here? We got a key level. We hit this level in the past, earlier in the year, this 86.25 zone. We're coming right back down there. We're 86.61. I like it. I think that zone right in there, 86.50. You'll notice our 13-month EMA is right there as well. That's sort of my bread and butter. Long-term levels on short time frames. I found that to be pretty good stuff for about the last decade or so. So I'm going to stick with it. 86.50, 86.25, absolutely beautiful stuff. So I'm looking for robust support right there. We had a trade idea out yesterday. It's over on my X account, ShaneV_trader. We also put that in the How to Trade trading room as well. Check that out. Get your free account over at How to Trade, and feel free to dive on in. All right, guys, we've got a few questions here that I'm sorry I got way behind, but this is exciting stuff. I've been known to get carried away, that's for sure. Let me see. I'm sorry, guys. I'm way behind. These are like 20, 25 minutes old. We had pretty good stuff there on that scalp. Let me see. NV, I'm from India. Good to see you, NV. Welcome. Tim, hey, Shane. How you doing, Tim? My apologies for the late replies to everybody. I know most of you probably already signed off because I was babbling there, but I'm sorry. It's that kind of day. We got to get in there. Let me see. Vic, do we go higher on gold? Yeah. I believe that. I think that you're going to see gold. Gold's been in sort of a holding pattern here. I mean, let's step back and see what's happening now. All right, our 5-minute chart was beautiful. Beautiful scalp. Right now we came back down. If I'm not talking and running my mouth and I'm sitting here trading, we could have hit that 62% as well. We're starting to fill in that NFP range. Don't panic. Don't worry about it. We expect crazy volatility on these news days. That's what you're going to get out of an NFP like this. That's what you're going to get out of the Iran war. You're going to get volatility. The question becomes, where do we start thinking about gold in 3 months, 6 months? You've got a war. All of a sudden, you got a plunging job markets in the United States. You got markets that are crashing. This is not prima facie conditions, but these are the conditions where you could see an equities market crash. If all that sets up, hard not to see gold up. We were talking about maybe topside targets, 6,000, 6,500, 7,000, 7,500, maybe by the end of the year. This is a tough scenario for a lot of folks to deal with financially. It's going to be a trying period of time here in the United States, that's for sure. And typically when the U.S. sneezes, the world catches a cold. This could definitely be a global economic slowdown, and we're seeing the conditions there. This is starting to feel to me like a COVID situation, and fear is winning the day. Fear's winning the day. Gold's coming off. We talked about this range getting filled in. Let's go back over to our 9 EMA. Did we get anything that was really great here? That trade right there was an absolute banger. We got the short and we got the long scalp, and now we are coming off. Beautiful trade. Couldn't beat that with a stick. Let's go to a 5-minute. What do you got on a 5-minute chart? You're probably going to get a 5-minute signal right in here. If you didn't, this EA right here, you should have got one right there. That would have been the 5. We'll go ahead and figure that out here in just a second. A lot of times, if you have any problems with these EAs, close the chart. That's all you got to do. Bitcoin, look at this Bitcoin play. Beautiful 4-hour Bitcoin coming off in a big way. Great Britain pound USD, 1 minute. You can see that got swept out right before the news. We never really did get the signal that we wanted. You can see right there, should have got probably something in here. Good stuff, though. Absolutely good move. USD coming back after being sort of a little bit weak for a minute. And now we're starting to trade to the downside of this range. Really like this Bitcoin, though. That's a fantastic position trade coming into the play late yesterday afternoon. Love it. Absolutely love it. This 4-hour chart in this 9 EMA. There's something there. There really is something there, and I like it. Let's see. What else do we got on tap? Let's go ahead and open up a new chart here. Let's open up a new chart. Remember, if you see that things aren't functioning properly maybe on your with any EA, you'll notice if you start adding multiple EAs to your MT5, sometimes they all bog down. The thing you do is you just go right here. I like color on white as my scheme, but you just go there and you just add your EA again, and you get it up and running. Something like this, pretty good stuff. Boom. So we're looking at gold right there. That's a 1-hour chart. Let's go right here on a 5-minute. So you should be able to see exactly what you've got cooking. Remember, we've got all sorts of parameters there. It doesn't look like we quite got there. It's very, very tight. And where are we going to get the signal at? I don't know, but gold right now plunging. Short-term price actions, absolutely brutal, especially when you're talking about commodity trading. Let's get back over here. So is there anywhere else we could trade gold right now? Now I'm interested. Now I'm seeing the big moves. Now I'm interested. Where else could we hit this thing? Let's back off to a daily. Things are starting to develop now. Shook a little of the noise out. Yesterday's low. Take a look at yesterday's low. 5,051. I'm looking at 50-50s potentially as the break point. You see 50-50 break, then potentially you're down there at that 5,000 level. Do you want to buy 5,000s? If you do, you got to be very, very careful, because if you wash out this swing low, Tuesday's low, we're going lower. We're going much lower. So be ready for anything. Tough for me not to stay bullish metals, though, especially after this jobs report. Absolutely brutal. Let me see. Bluefin, USD dropped like a bomb, but is recovering like nothing happened. This is short-term trading, guys. Absolute short-term trading. Unbelievable. Let me see. Financial Juice. Kuwait cuts oil production as storage fills up, and then there you have it. So essentially, they're going to cut oil production. Good call, Lewis. They're going to cut oil production because they can't get it out. Supplies or stocks are full. You can't get it out of the Persian Gulf because the Strait of Hormuz is log jammed. What do you think? Let's be honest. I mean, let's just dial this in and put our thinking caps on for a second. Okay, you're cutting oil production. You can't take any more out of the ground because there's nowhere to put it. All of a sudden, all of those Emirate states, Kuwait, not Saudi, well, yeah, Saudi probably, but also, you're talking about all these places, Qatar, all of these production facilities, they have X amount of supply. And this thing runs like a clock. They take it out of the ground. They go into their tanks. The tanks go into the tankers. The tankers go out the Strait of Hormuz. All of a sudden, you got that choke point. The tankers can't go anywhere. Is there anywhere to offload this supply? No. Tanks are full. Do you think that makes them major targets for Iranian missile strikes? Oh, yeah. Oh, yeah. We saw this, I believe it was in the first Gulf War, when Hussein was under fire. What did he do? They went out and they lit their oil wells up. This would be the same type of thing, blowing up storage facilities. They have to be on absolute high alert. That's a fantastic call right there, Lewis. Storage fills up, so your storage tanks are full of oil. You can't get rid of it anymore. You can't put it on the tankers and send it out the Strait of Hormuz. If Iran's serious about causing chaos in the global economy, they'll start targeting those storage facilities. That's something that we have to look at over the weekend. Absolutely have to. Those storage facilities start being destroyed, and you think, well, Shane, why didn't they do it already? Well, I don't know. You tell me. I have no idea. It sounds like chaos over there, but that would be a high-value target for sure. Let me see. Luca, hi, it's my first time here. I learned with your videos the EMA strategy. Do you stream regular? Really nice. Greetings from Europe. Absolutely, Luca. We've been on twice a day this whole last week. We stream every single day on the Switch Markets YouTube channel, so be sure to check that out. We're also on pretty much every day on our How to Trade channel and also our Forex Signals TV, and it's also over on X at ShaneV_Trader. So I stream a lot. But these big events are the keys. These are the ones you want to see. A lot of times we don't have much to talk about, but I answer questions every day. So yeah, let me see. You the goat. Your mother. You the goat. I don't know about that. Let me see. Thanks for the info, Lewis. Tina, absolutely right. And that's why we like to live stream and get everybody together. You guys see something, you chip it in on the live chat because we can't monitor it all. That's for sure. All right, let's talk a little bit more about this jobs report, and then I'm going to do a quick news scan and see if I can pick up on that those production cuts. That's huge. Excuse me. Sip of coffee here. All right. Here is the official report. U.S. Bureau of Labor Statistics, employment situation summary. Excuse me. Total non-farm payroll employment edged down by 92,000 in February. The unemployment changed little at 4.4. That's horrible. That is horrible. Not good. Excuse me. I need a cough button. You always skip to the bottom of these because the devil's in the details. The devil's in the details. They start talking about all sorts of different parameters, but you want to go right to this last paragraph right here before we get into the charts. The reason why, those are our revisions. I have no idea what they are. Let's have a look. The change in total non-farm payroll for December was revised down by 65,000. Holy cow. The change for January was revised down by 4,000. With these revisions, employment in December and January combined is 69,000 lower. Holy cats. Holy cats. What happens to everything? Wow. Absolutely unbelievable. Absolutely unbelievable. That's about as bad of a jobs report as I've ever seen. Things are going south in a big way. Let's go on over to our CME FedWatch tool. This tells us our interest rate expectations. Remember, it's all about interest rates. When the jobs numbers are horrible, the Fed typically cuts interest rates. When the job numbers are great, they typically hold them or raise interest rates. FedWatch tool. For the March meeting, 18th of March, I'll have the coverage live for you here. FOMC live, 95.6%. 95.6% that we hold rates static. That's absolutely fascinating. Absolutely fascinating. April, 29th April, right here. What do you got? You've got 79.7% say that we hold firm in April. You're not getting a rate cut until Jerome Powell is gone from the United States Federal Reserve. 17th of June. This is expected to be the first meeting for Warsh. 54.4, 38%. We still believe it's a 50-50 chance that you see your interest rates held firm even at the June meeting. I think that has to do with when Warsh is going to be actually confirmed into his seat. How about July? Okay, July, now we're starting to shift into rate cut mode. Remember what I told you back in January. The things that I always focus on at the beginning of the year is where interest rates going to be at the end of the year. And I was relatively confident we were going to see them down in here somewhere. Does the war change things? Of course it does. Changes things in a big way. But you can start to see that normal distribution is shifting to the left. I expect us in June, maybe even earlier, to see these odds over here up in here somewhere. If we don't see that, then that means that there's, I won't say trouble in paradise, but it means that they're going to hold rates firm in an attempt to control inflation, which, you know, I mean, I'm going to show you your inflation right here. This is it. I mean, oil's gone. Good night, sweetheart. I mean, the oil's gone. We're flirting with 88. And, you know, the biggest thing that I would stress here is to keep your cool. Don't go rushing in. This volatility is absolutely staggering. The volumes are staggering. 2,300 in a minute. These are contracts traded. Let's go right here to my trade. Let's get our paper trader going. Let's go right here, trade. So this is a trading dome. If you're not familiar, this is incredibly active. I mean, take a look at what's happening here. Prices jumping around. You'll notice that the liquidity at each price point isn't really there. And that, even though there's a lot of volume involved in the markets today, the actual liquidity isn't steady. And that's why you start to see your DOM jump around. These bids and asks, they're not as consistent as they typically are with WTI. You don't see that in WTI. So even though the market is trading and it's huge and you're getting a big move and a lot of volume, you'll see that jump right there. That means that there's not, those price points are not dug in. There's not a bunch of punters in there. There's players, that's for sure. But what's happening is at each price point, the market's kind of thin. What does that mean? It means that the market's going to jump around because nobody knows what the hell a barrel of crude oil is worth right now. And I love it. It's opportunity. It's opportunity in its purest form. It's exciting. So it's pretty good stuff. I like that. Let's see. Zubo, good to see you. Zubo, welcome. Let me see. Drupe, Sensei Shane. Sorry, it's been a while. Historically, when oil goes up, does that incentivize or disincentivize rate cuts? It's a great question, Drupe. It's an absolute great question. I heard yesterday, I sat there and listened to Kashkari and Williams drone on and on about, well, we can't do anything now because we're worried about the topside energy risk, the energy risk on the market. So they say that they need more information, and they're in a hold mode. They're not in a rate cut mode. They say, well, because of the war, because of the rate hikes, because of the high energy prices, we're worried about inflation, so we can't cut interest rates right now. And the counter argument to that is, listen, you just got a horrible jobs number. Your war is going to it's going to put major stress on the global economy here in the U.S. as well. Everything from manufacturing to consumption is going to suffer. There's no question about it. The only way out of that really is to cut interest rates way down, like a crisis situation. So it's the question of all questions, Droopy. What the heck are these guys going to do? Are they going to cut rates? Are they going to let them play? I don't think they're going to do anything. I think they're going to show up at the next Fed meeting. Jay Powell's going to go, I don't know. We feel like we're in a good place right now, but this war is a tough one. I don't know. That's exactly what's going to happen. And I shake my head because it's an election year, and I am not kidding you. I'm not trying to be a hype man here. I'm really not. This type of situation reminds me of COVID. It really does. US 100, take a look at it. Hang on a second. Of course, we lose a little bit of power. I've been losing power to my USB ports all week long. Oh, there you have it. It's gone. It's got to sit here and wait. In any case, what you see happening here is absolutely huge for the markets because you've got major bearish price action. All right, you've got major bearish price action across your equities indices. We're off big, and when we're off big, what can we really say about it? What can we do? We can get out of the way and look for bigger levels. But right here, it looks like I lost all power to my USB port. Wow, unbelievable. Okay, here we are. Are we back? All right, we're back. It has been just finicky this week. I swear we get hacked during these streams. But in any case, right here, big plunge, daily plunge. You're coming up on the U.S. Open here in 22 minutes. Can you save this market, or does it just go absolutely crazy on the U.S. Open? 25,000 is big. We really are trading way away from 25,000. Is there any place that we can think about getting long with any sort of confidence? Look at the weekly chart for the NASDAQ. Horrible. Straddling 25,000. It's non-directional. It's really bad. Let's go to a monthly. Is there anywhere in here that we can buy? 13-month EMA, and we've been leaning on those in a lot of markets. That tells us there's a tremendous amount of indecision. That's interesting to me. So right there, a 13-month EMA, you're looking somewhere right around 23.525. Shane, that's a long ways away. Key levels for this market, 25,000 clearly. This is starting to look very bearish. There's your break point. How will you know that things are very bearish? You'll break below that low, last month's low. Know where all these key levels are is very important. Your low right there, 24,146. If you break beneath 24.1, look out below. I mean, this thing could really crater in a big way. Or you could dig in and get some bidders down here. It wouldn't surprise me to see some bidders and drive us back up to 25,000. But the table's set, and I'm interested in what happens here on the U.S. Open. Let's check the Nikkei, and then I see a question about the NQ, and we'll sort of leave it there. Okay, Nikkei getting crushed this month, off almost 8%. Let's go down to a daily. Yeah, you bet. Okay, if you're looking at the Nikkei, compression, absolute compression. Big move Tuesday. We were here for it. Bounce, rebound. We were there for that. And then we came off again yesterday. It feels like this thing is going to explode to the downside. Now, I'm not telling you to sell it right now, but this is a textbook compression pattern. We could easily get a break and a run right down there. That 50,500 level that we were talking about the other day, that looks pretty good. Looks pretty tasty to me. 50,003, 50,005, somewhere right in there. Probably great downside support. Once again, keep an eye on January's lows. I'm not as concerned about these lows these lows down here, just because I think that you've got more room to work. And by that, I mean, it's more of an elongated thing. It's not as compressed. This is compression when you're at a level for a couple of months and then you break. We've seen that in the NASDAQ. That's what scares me about this US 100. Compression. Once we break, essentially that'll be the bidders packing it in, putting their back against 25,000, and then really getting that down action. It's a concerning time if you're holding longs. It's a concerning time. There's reason people are going to get forced out of this market underneath last month's low. Okay, let me see. Lewis, what do you think of natural gas, Shane? I'm in a small long position from 3,100 looking to swing. All right. We'll look at natural gas and then NQ, and then we'll go ahead and call it a day. I've been going for too long already. Okay, so right there, that's our key level, 2025's low, 26.39. Okay, we've got that far. As far as, let's go to a daily. Now, what's been interesting since this war started was the relative stability in natural gas. It really has been all about crude oil and the volatility over there. Here's the stability. I mean, very, very stable. Very, very stable. Even though the daily ranges are kind of getting a little bit larger, stable. I mean, we didn't see this type of stuff when we saw Russia-Ukraine. Or, no, that's not Russia-Ukraine. Back in early or middle of January, late January. You didn't see this kind of stuff. And then the gap down. You didn't see any of that. It's been very steady, which is fascinating to me. I would have bet against that. If you're holding longs, it looks like you're on the right side of it. Broke above the 13-period EMA, 13-day EMA, which is up there about 32.5, 32.53. Pretty good point. I would definitely be watching this closely. I think that if you reverse and maybe get a daily close, if you're talking about swing trading and you get a daily close beneath that level, my spidey senses would be going off. But if you get a daily close, say above 13, what you're talking about, Lewis, is if you're talking about swinging, you want a small long position from 3,100, you're doing well. The question, and you really played a breakout beautifully down in here. You're talking about swing trading. That means you're holding this thing through the weekend. Just know what can happen. I mean, I'm sure you're thinking maybe something like this can happen and you could run into some absolutely huge profits. And it's true, you can, but something like this can also happen. I mean, really go back to the 30th of January. Take a look at that close. Close was 565. Where was the open? The open was 4725. That's absolute destruction to your trading account. If you get caught long and something like that happens, something like this happens, something like that happens. But I'm not shying you off your idea. I mean, if you want to go for it, go for it. Just understand the risks. Even if you have a stop loss down, if this market opens gap down, you'll be filled as soon as the market opens where it opens. So you could really be in trouble there. But on the flip side of it, and why I'm not going to scare you off of this, is if this war escalates over the weekend and we see some big-time market movers to the bull for energies, which it looks like people want to buy energies. then you could see something like this. I mean, you could get in the middle of something like that. It's very possible. So I can't tell you what to do, and I won't tell you what to do. That's all about your own risk management and where you feel comfortable. So proceed with caution, and all the best on your trade. That's all I got to say. All right, last question. Ahmed, what do we expect to NQ with this news? Well, I've sort of covered the US 100. Let's go to NQ. This Great Britain pound euro trade, though, I'm liking how that's setting up. Let's go right here. Short term, you can see that we do a lot of Fibonacci's here. Okay, so a monthly chart, if I'm trading NQ futures, NASDAQ futures, you're definitely, believe me, in the futures market, you have to mark these levels. That's where typically the washout will begin. The low down there is 24,239, so definitely have an eye on that. As far as where we're at, say, on a daily, it doesn't look good. I mean, we're running at that low right now, and the market hasn't even opened yet. Maybe you get a buyback on the U.S. Open in 15 minutes, maybe. But this action right here, this could get very, very ugly. Very, very ugly. So what have we been talking about in the other markets? Key levels. Right there's last month's low, 6th of February. Right there's this week's low, Tuesday's washout low. You better believe there's stop losses under there. You better believe there's stop losses under Tuesday's low where they took a position on the buyback. That's a common strategy among traders. They'll sit there and they'll say, okay, we're going to go ahead and buy the electronic open, which was right here, and then we're going to stop ourselves out under the low and let this thing run. You bet there's going to be stop losses under there. So what I'm really worried about, and let's go to the telestrator and sort of show you my point, is this selling is significant. Now, I don't know, believe me, if I knew the market was going to go down and wash this out, we would sell it right now and then we'd all go to Hawaii. I don't know what's going to happen here on the open. You could see this market get bought back. It is possible. It really is possible, but things are starting to look ugly. And what could happen here from a technical standpoint is you got stop losses here and you've got stop losses here. Last month's low, this week's low. Now, typically, I wouldn't put much emphasis on this week's low being key, but what's important about this is our news cycle. And we've also traded sort of, I won't say tight, but we've traded sideways. You can't argue with that for the last 3 days, 72 hours. So if this thing comes down and we wipe out this week's low, we could easily get enough trajectory to wipe out that monthly low, and what ensues is a washout. That's how a washout begins. Now, after the washout, after that initial rush, a lot of things can happen. We could pull back and then keep the trend going. We could become base down in here and then rotate back up into this range. I've seen that happen a million times. My point is this: there's going to be immediate strong price action under there. Be careful. If you're holding longs, those are the levels you need to say, I don't want to be in here anymore, because that's what the rest of the world's going to say. Now, if you're thinking about going short, okay, where are you going to go short at? You can go short right here, betting on that initial rush. But if you do not get it and they step up and they protect this area and this thing rebounds, you got to get out, because it could you could easily see a sell-off that takes the NQ, the NASDAQ. You could easily see that coming off down to 2.5% and then bouncing back and closing maybe near a scratch or maybe down 1%. I don't want you to get caught up in that. So a lot going on here. A lot going on here. I love it. I think it's absolutely fun. Let me see. Matlin. Okay, one last question, then we're going to go ahead and sign off. You're welcome, Lewis. Let's see. Matt Ladd, where does gold in 2 months? What are the lottery numbers tonight? I don't know. I have no clue. I think that gold's bullish, but it's definitely slowed down. I don't think we're done doing business at 5,000 yet. In 2 months, it depends. The war could do anything. Anything can happen there. We're looking at 88. We're staring down the barrel of $88 crude oil. I don't know. I genuinely don't know. I have a bullish bias, but it wouldn't shock me to see a big washout underneath 5,000 before this thing continues north. Does gold come back down to 5,000? I would bet on it. Today, I don't know about that. Early next week, potentially. Interesting stuff. Great time to be a trader, that's for sure. One last thing I want to show you here, and then we're going to go ahead and sign off because it's key. This is just for your scheduling. Daylight savings time here in the States. So our stream times, I don't know what it's going to do to you locally. I'm going to keep it at the same time next week, about midday session. I haven't decided yet if we're going to launch another set of these early morning streams, but we may. If the activity is there, we may. And if there's breaking news, I'll just jump on and break it down for you. But this right here is in your Switch Markets portal. You should have got this if you're on your MT5. But right there, Sunday, March 8th, we will transition to daylight savings time. So it's going to change your trading hours and what times the markets are going to be open in your own locale. So be sure that you check and work that out. I don't want anybody getting messed up with volume just because they don't know the time that everything's kicking off. All right, everybody, I've gone on long enough. I'm going to go ahead and sign off. You guys have a fantastic trading day. This could be one for the books. Crashes typically happen on Fridays and Mondays. I'm just saying, but this has a COVID type of a feel to it. Very heavy. Markets are very heavy, and that crude oil and those energy prices are bringing a lot of concern to the global economy. No question about it. We'll break it down more for you next week. Remember, daylight savings time, so don't get messed up on that. I'll have the stream schedule up at How to Trade here momentarily. I just got to decide what we're going to cover and how we're going to do it just yet. But I'm going to go ahead and get on out to the U.S. Open, take a good look at this price action, and maybe see if we can knock a trade or two off a little bit later today. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.